Amid the lack of economic and political news, the currency market is trading sideways. The economic calendar is empty today, like on a Monday. After Joe Biden abandoned the presidential race, markets have been in a wait-and-see mood. Meanwhile, the global community is looking forward to his address to the nation, which could be made in just a few hours. Most likely, Joe Biden will formally endorse Kamala Harris as the Democratic presidential nominee. The main factor here is that such a quick nomination of a new candidate significantly reduces political risks. However, market participants are trying to figure out what the candidates can offer and how the polls may change. In other words, Kamala Harris' entry into the presidential race does not mean her guaranteed victory over Donald Trump. By the way, officials of the Chamber of Digital Commerce have already asked Vice President Kamala Harris to take a positive position regarding cryptocurrencies. You are aware that support for the crypto community has become an important issue in Donald Trump's election campaign. So, the same step by the Democratic candidate will not only add more votes to them in the elections, but will also push Bitcoin up. Today, the number one crypto is trading in the same range of $66,267 to $68,272, which is entered last Friday. The US dollar gained ground across the board amid the suspense in the market sentiment. During the first half of Tuesday, the US dollar index, which determines its position in relation to six major rivals, is trading higher within the range of 104.20 to 104.40. Perhaps the US dollar may be agitated by reports on existing home sales in the US. According to flash estimates, they will be released at an elevated level around 4.25 million units. In this case, the US dollar will receive modest support. You can learn more about the impact of red-hot economic reports on the currency market in our trader calendar. To sum up, the elections in the United States are still far away, more than 3 months. It means that the markets will shift focus to shorter-term macroeconomic factors. For instance, the Fed Reserve plans to lower interest rates. Judging by Wall Street's rally, election risks are not yet being factored into stock prices. For example, the S&P 500 index today went up within an intraday corridor from 5,529 to 5,570 points. In theory, the single European currency should trade today in the same way as the US stock market. That's to grow as a risk sentiment is reviving among investors. Moreover, the US dollar remains depressed in the absence of fundamental economic data. Instead, the euro is trading flat as it remains under selling pressure from the difference in the key interest rates between the ECB and the Fed Reserve. In this context, the advantage remains with the US dollar. The Fed Reserve's policy meeting next week will hardly change anything. Today, the euro weakened considerably after comments by ECB Vice President GUINDOS. In particular, he said that inflation data is almost consistent with the regulator's forecasts. He believes that September is a much more convenient month for making decisions than July. Moreover, the election results in France caused unwanted uncertainty in the euro area. In the meantime, the euro-dollar pair got stuck just below 1.0900. Then the euro began to fall within an intraday corridor of 1.0872 to 1.0899. To add more short positions, the peers need to stabilize the price below 1.0860. In this scenario, the downtrend will develop further and the price will drop to 1.2800. A bullish scenario will be considered by market participants if the euro-dollar pair rebounds above the level of 1.0900. In general, cautions trading across all assets can also be explained by concerns about a slowdown in China. Investors moderated worried about after Beijing's decision yesterday. On a Monday, the People's Bank of China surprised markets by cutting key short-term and long-term interest rates. It was the first such large-scale step since August last year. Thus, the monetary authorities displayed their intention to bolster the growth of the world's second-largest economy. Time will tell. Considering that China is also the leading economy of the BRICS alliance, news about the revival of China's economy is also positive for this anti-Western alliance. This is also true for the oil market because China is the world's top oil consumer. Markets are still reacting to other macroeconomic factors. The main one is a possible reassessment of a supply and demand structure in the near future. The fact is that the OPEC Plus agreement to cut oil output rates is valid only until the end of the third quarter of this year. At the moment, market participants are wondering whether it will be extended. The popular mass media are even promoting the idea that the pact will cease to operate. In this case, there will be an oversupply in the market already at the beginning of next year. These rumors are currently putting pressure on oil prices. Thus, the Brent price has been locked in a narrow range of $82.00 to $82.80 a barrel for the second day. Today we saw faint buying activity which will most likely fade away again when the US dollar asserts its strength. In addition, traders' selling interest continues to rule the market. Analysts say a subsequent decline will push the Brent price to the area of $80 a barrel. We warn you that crude oil is now oversold, and this is clear especially in smaller time frames. Therefore, analysts do not rule out a partial recovery in the Brent price as it approaches the level of 80. The dollar-ruble pair remained around 88 for a long time despite high volatility. However, today the situation has changed dramatically and sent the price down to 86.30. The thinking is that the Russian ruble is finding more support during the tax season, which is entering its peak. Our analysts expect the dollar-ruble pair to gradually move towards 86. You have watched Market Review on the InstaForex TV channel with me, Kate Tikhina. We wish you profitable trading and see you soon. The expansion issue is relevant for the BRICS alliance. They will need stadiums rather than assembly halls for the summit soon.